Okay, so reviewing our NIO play from last week. This is basically what we had. We started off with the downtrend, which is the predominating trend up to now. And this sets us up with the bigger picture. And on top of that, you overlay the market sentiment, which is also bearish. And on top of that, you overlay the recent economic data. The only thing we had bullish going on for NIO was recent news about deliveries and new market penetration, but not much else. So our play sort of worked out. If I zoom in from the weekly, I'll just jump straight into the 30-minute. We had the bullish play. Let me see if I can zoom in on this. And this is what our bullish play looked like. Now, if you recall, this was our long position. This was our long position here with the start or the entry level right at around 16, which is where we had this previous line, this previous resistance. So what we did was, never minding the current lines on the chart, we were basically at this level, which was Monday, October 3rd, and we hadn't started the trading day. And what we said we were going to do was, actually, this is Monday. So this would be the Monday trading day. So we had this previous resistance. And what you want to do is you want to start out by looking at your previous closest resistance and support, which in this case actually would have been this one. Didn't draw that. Let me go ahead and just real quickly clone this. Of course, this is after the fact, but no matter. This would be sort of our previous support with touches here and touches there, which is actually at the very beginning of the day, so it doesn't really count. But we basically said, okay, our entry level will be once we break the nearest resistance in the case that we're going long. In the case that we're going short, then obviously you would begin your play on the break of the nearest support. So in this case, I decided to take it at the break of 16. And that actually happened right at the beginning of Tuesday. If this is 30 minutes, so this is the first half hour, and that's the second half hour right there. This is where the first, in this case, 50 or 30-minute candle. Let's actually go and drill down into the finer 15-minute one. Okay. And as you can see here, on the beginning of Tuesday, it breaks above, but it actually closed right on. But on the second candle, it actually closed above that resistance. So this was our entry point right here. So we did have a small profit with our first target, which was $17.44. So it was about $1.44 above our entry, but it wasn't. It definitely wasn't reached. And then after that, it just kind of leveled off. And then the next day, which was Wednesday, where we had some economic news, I believe, we took a little bit of a dive. I think the entire market took a little bit of a dive, so it took NIO with it, obviously. And then today, on Thursday, we had an even, well, actually, the size of the drop was about the same, but we had more bad news, is what I was trying to say. The drop here was pretty much, if we take, now let's not take into account after hours, it was about $1.12, and today, Thursday, it was about 90 cents. Okay, so they weren't radically different. So obviously, whatever profit, if we took away runners, and that's why you want to have runners, then we might have taken some profit here because this was well above actually we can use this measuring tool to figure out the profit, not of the option, but of the stock in this case, about 5% right there to the upside. And we take some profit, and we might have basically came out even if we would have taken the stop loss over here if we had any runners. But normally what you do is you move up your plan as you well, normally when you reach your first price target, which we didn't in this case, but the minute that we started seeing that this was not really working, even if we would have taken the profit in any one of these two candles right there, we would have moved up this stop loss, probably moved up the stop loss to the entry. The stop loss was 15.16, so we would move our stop loss up to 16, which would have been our entry, and that means that we would have gotten out somewhere around here with the runner. We should have taken the profit up here. Okay, so that was basically what happened to NIO, and what I wanted to go over was actually why did this happen, which is something that I've been struggling with, I guess you could say. If this was where it didn't really continue, although if you look at the actual trading day hours, which is right here, it actually reached the peak. The high was around 1686 and it closed the day 1671, so it's not that bad. This was really more, and even right before the open, it was still up around 1672, which was very near the closing. So Wednesday, the market drop on the economic news was what actually brought us down to 15 something, 15 and change, which is a little bit below our entry point. So the play technically did work out. If the market wouldn't have, brought everything down with it, then this probably would have reached that target. Okay. Now, why did it reach this exactly? 1680. Let me see what we can draw here. 1680. Why did it reach 1680? Is that a significant level? So this is where, and now that I look at it, is also why did it stop here today? And the reason I want to do this 1480 is because I do not have these levels on my chart, as you can see. So in this case, what I'm wondering is why is 1480 and 1680, why are those levels on this chart serving as support and resistance, and I did not have them marked? So when something doesn't go exactly according to plan, you still have to go and learn from it. So I usually don't do a very good job at that myself, actually. So this does seem to be a level from right here, which was September 28. So it wasn't that far away. So let me actually extend this to the left, and 1680 is still going to play a significant level all the way back to September, which is right. That's 1679. There we go. So now it's sort of 1682. Okay, so that was a level that I missed. This is a little annoying. Let me fix that. Okay, so that's 1682 right there. So I missed it here, and I should not have missed it because it was a rather short-term level, but it was one. I should have been able to identify that. And now let's look at the 1480. So let's move out to the 4-hour. We might even find 1680 again somewhere. 1680 is around over here. Doesn't seem to be much of a level. And 1480 is definitely not a level. Let's keep going back. Okay, I believe this is 1680 right here. Sort of. Yeah, I can see some touches. And this, of course, is where as with most things, you don't want to go overboard with too many lines. So let's actually extend this and see if I can see a point over here, 1682, 1680, 81, 82, right there. Okay, and I'm getting into the habit of marking these to actually see where I believe my touches were. So that should be right there. That's that first touch. Okay, hold on a second. It's not marking my touches. There we go. Okay. See if we can get this working. There. Oh, okay. I see what's going on. I grabbed the brush, not the highlighter. There we go. Okay. Highlighter is the best tool for marking touches. So there's one touch. There's another touch. And that next one kind of broke. There's another touch in there. There's a touch there. There's a couple of touches there, which I'll just mark like that, and you can count this wick as a touch. So yes, 1680 is definitely a level. 1480 should be around here. I'm going the wrong way. Right around here. Yeah, I guess it could be a level. Which would be, yep, there it is. Definitely. Okay, let me try to drill down and see if I can rescue that trend line I have over here. That was the wrong way. Still can't find the 1480 line. Was it that small? Alright, let me zoom in here. Try one more and then zoom in. Yeah, I definitely can't see it. Well, that's interesting. Okay. The only thing I can figure is that it's hidden in here. Can't be that one. That's just a one touch. Okay. Okay. Let's start drilling down. See if we can find this guy. There it is. Why in the world? No, that's the 1680. Oh, okay. It was really small. That's why. Okay. So this is, let's just extend this all the way out to here. Hopefully be able to catch it. There it is now on the daily, which is where I believe we had it. Alright. 1480. Okay. Let's zoom out again. See if we can find those. There they are. And we might be able to get a couple more if we go further back. That's the problem. The further back you go, the more you find levels. Okay. So let's see if we can set this at 1480 exactly. Oh, there we go. 1480. Okay. Let's go back to our highlighter, and I guess you could count that as a touch. If you're sloppy enough, that one's definitely a touch, and so is this middle one. Alright, and if you wanted to, you could go as far as to say is that one. So that is why it hit those levels. Now, important for two reasons to go back and find them is, number one, because you want to understand where your plan went wrong, or sort of failed or didn't go exactly according to plan, etc. And then the other reason is because those might be future levels of importance. So I guess that is how to miss levels on a trade plan. Okay, now this is not a long-term level, not as long-term as this yellow one that I have underneath here. I'm actually going to switch these back to yellow. I was just using the red to kind of identify them until I was able to trace them back. But those are two. I'm going to actually set those to 1. I leave the 2 pixel lines for the very solid, probably more than 1 year levels. So I'm going to leave that in yellow 1. Okay, so those are still going to be important levels going forward. And now what I want to keep an eye out, now we have to basically reshuffle our play. Now if we zoom out the way we were back to the weekly, we zoom out and bring this back in. If you recall, obviously the trend is still down and we were sort of trapped in this channel right here. Tried to break out, that didn't work at all. That was a very short-lived breakout, and then slammed back into the channel really fast, really hard. 3 long red candles right there, and so now we're reaching these levels. Look at how that MACD is curling, but of course that's based on past data, so got to be careful not to get too biased because of the MACD. And okay, so it seems like we're very close to that very long-term, ergo very strong support level at 1429. As you can see, actually those are the ones that we marked right now. You can actually see how there's another one right there. Let me see if I can draw that one back down, because I'm pretty sure that's the 1 pixel yellow, 1480. So I want to bring that here and just be tidy. 1480, yep, okay. And the only reason why I wanted to do that is because I wanted to get that other touch there. Okay, so we're starting to see that these were actually quite important levels. And but the one beneath it is a lot stronger, just because of the fact that it touches on a weekly and goes far back. Actually, let's see exactly how far back this level goes, because it's pretty important as far as I can remember. It's got a couple more touches there, but before I mark those, just because I remember from watching this chart quite a bit, I'm pretty sure that this thing goes even further. Here we go. This is pretty much the beginning. Let me see this out of the way. From 2018. So we can actually bring this guy, which is 1428. We can bring it all the way back to this wick right here. There we go. I think I went to 1431. Let's bring it down to 28. Okay, so that is one of the strongest levels we have. The only other stronger level that we might want to keep an eye out, just because market sentiment is not very good and things might happen, is this level right here. So I'm going to go ahead and mark that and make sure that that's a 2 pixel solid, because that goes way back to the beginning, same as the one we just marked. Hopefully we won't go past that. And now let's go back and look at what we have. Let's see. And since we're looking at these levels, I happen to see this one that goes all the way back. Look at this guy. The one we just put in, which is that line right there, which is at 1680. You can actually bring that guy all the way back. And 1686. Let's move that up to 1686. Okay, so grab our highlighter, and here we go. We got the one touch right there, 2, 3, 4, and then all the recent touches that we just put in. So shame on me for missing such important levels. Those are pretty strong. Now that I'm here, and because they go back so long, I'm actually going to throw in, because that's from 2020, I'm actually going to throw these into a 2 pixel line as well. These are pretty strong levels. And I believe we now have 2 above and 2 below, 2 of the strong ones. So let's drill back down to our, there we go, to where we currently are. So you can see this is where it closed today, Thursday. So we have this strong level down here at 1428 and the next one at 1016. And we have 2 strong levels up above. We have this one, this one, which is 1580, and the next one up here, which might need some adjusting, near 1680. Okay, so let's drill down and try to find our new trade plan for the coming week. So this is basically where we're at right now. Okay, there we go. We're missing one level to the downside because this is actually to the upside, as is that one. We're missing one level to the downside. Let me try to bring that into focus. Oh, because I believe it was the 10, so that's probably not going to show up in here. It's too far down. Okay, so this is where we're at right now. Now, the way we're going to draw up this trading plan is that we're going to use our entry to the upside and our entry to the downside on the nearest longer term supports that we have. So we're going to bring this guy basically down to here, and that's our nearest resistance. And because we want to make this is a 175 R&R, we want, just because I'm more conservative, I'm probably going to want to do that 3-3. That's too much, but that's because our upside target is not correct. I'll bring this down, and there we go, 263. Okay, and we still have levels, intermediate levels here. Put those back to a 1 pixel, and because we're inside the daily and the weekly, I'm going to switch that to the dashed line just to help me remember that these are shorter term levels. So I'm going to make that a 1 pixel line and dashed. There we go. Okay, I believe I can actually right extend this without having to do all that. Maybe not. I thought there was a way to extend this to the right without having to draw it and then having to, yeah, here we go. Extend right line, here we go. There. That way I don't have to level the line and mess with it. So those are our shorter term, there we go, our shorter term levels. And again, just because I'm being more safe than anything, I'm using this stronger level as an entry. Don't want to use this one just because it might be easier to get faked out on this one. And we're going to use a put play or a short position down here, and we're going to start it at our nearest support level. So we use the nearest resistance for the long play, and we're using the nearest support for the short play. And probably going to use that current level as a stop loss. And we're going to use this level as our profit target, our first profit target. Okay, and we're still within this channel that we talked about. Okay, we're still bouncing inside of this channel. So this is, if we assume this is going to break down towards the bottom of this channel, then this is our play. Otherwise, if we think it's going to bounce and at least go for the top of the channel, then this is our play. We just adjust this, make some room for overnight. Okay, so that is what our play will look like. And now that I'm here, I remembered that I probably want to take into account the moving averages. So let's see what we're sitting at, where we're sitting at with these moving averages. All right, so that's good. This means that if we take the break, well, but this is the 16. Okay, yeah, the 200 is not going to show in here unless we get. And those are all bears. Maybe it's bullish on the daily flag. Okay, there we go. So there's the first one, which is the 200. So this is the 16. This is the 200, and then the red one is the 333. So the 100 and the 50 are going to be somewhere in between here. But basically, what this means is that by the time price action reaches this level, which is actually our entry point, we will definitely be above the 16, definitely be above the 21, which is going to be somewhere in here, and very likely be breaking the 50 SMA. Okay, and then we'll have to look out for that 100 SMA as it keeps coming down, even if price action goes up, because the 100 and the 200 and the 333, sorry, are much slower lines, because they're longer dated moving averages, then they're going to keep coming down even if price reacts. See, the short level MAs, like the 16, the 21, the 50, they react a lot quicker. So price action turns back up, and this green 16 WMA is going to turn back up pretty much with it. Same as the 21 and the 50 a little bit. But this 100 is going to keep barreling down until it hits that price action somewhere around here. So if it's able to break the 50, I'll go ahead and use the support to take my entry. I would have preferred the 100 to also be broken, but the 50 will do, just because this is a strong enough support. To the downside, then obviously if price action goes down and we reach the 1428, then we will obviously be below every one of these moving averages, including the 16s. So the thing is, let's think about this now. Previously, we took the long play, which sort of worked, but we had very few, good NIO specific news to carry us up towards that long play. In this moment, there is no more specific news that I've been hearing about. There's some bearish Tesla news, just because of all the Twitter talk and how it's going to distract Musk from Tesla's objectives, which is unfortunately something that will affect NIO and any other EV ticker for that matter. So that is one. We're missing NIO specific news, bullish news, which is bearish, and we have EV industry bearish news. Well, not industry, but I guess it's called compassion. No, it's not called compassion. But basically, how one ticker in the same industry affects the other, even though it's not industry wide spread news, it's still, you know, something that could bring NIO down. So we have basically two extra bearish catalysts coming up for Friday and for the rest of the week. And then on Friday we get some more of the jobless news. So that might, which is probably, if it's, you know, if it's bad news, it's good news. If it's good news, it's bad news. The point is that there's very few bullish or upside catalysts for NIO now, and it basically still has some more room to the downside. So I would rather take a bearish play now on this one, and this is what I will be looking at, basically to enter puts at around 1430 and expect it to drop to about 13, possibly even more. It could break this support as well. So that is the play that I'm going to be aiming for to take it tomorrow, but I will wait for obviously for the economic news, which is going to come out before market open, so that's not a problem. So let's see how this play works out for us in the coming days, and I'll see you next time.